In the United States, the Federal Reserve, also known as the Fed, exists to maintain a stable and growing economy through price stability and full employment, which is its two legislated mandates. Now, historically, the Fed has done this by manipulating short-term interest rates, engaging in open market operations, and adjusting reserve requirements. Alright, so in this video, I'm going to discuss the latest update from the Federal Reserve and what it means for all of us going into 2021. I'm also going to discuss the U.S. economic outlook going into next year and discuss concerns such as inflation and interest rates. Now, I really feel like this message from the Fed is even more important given the uncertainty around our next stimulus package. Now, I'm actually filming this video Saturday, December 26th, and as of now, President Trump has not signed the $900 billion stimulus package. Now, it's actually quite possible by the time this video posts to YouTube, it could have been signed, but as of now, while I'm filming, millions of Americans are affected with unemployment benefits expiring, rental eviction protections expiring, and so much more on the line. Now, one thing I can tell you guys for sure is that the Fed has consistently said throughout the year that Congress needs to pass additional stimulus, and given the circumstances of our economy, there is no such thing as too much stimulus. Alright, so the Federal Reserve is America's central bank. It's essentially the bank for the banks and is responsible for conducting monetary policy and controlling the money supply within the United States. Now, the primary tools that the Fed uses are interest rate setting and open market operation. So just so you guys know, in the latest Federal Reserve meeting, which was the last for this year, 2020, Fed officials reaffirmed their commitment to helping the economy through this pandemic. Fed indicated that it will continue cushioning businesses and households by keeping interest rates at rock bottom and by buying government-backed debt for the foreseeable future. Now, Fed Chair Jerome Powell stated that the Federal Reserve will continue to support the economy by buying treasury bonds. By the way, if you're enjoying the video so far, do me a favor and tap the like button. If you're new to the channel, welcome. We focus on finance and real estate topics. Consider subscribing for new value content every week. And if you're a returning subscriber, thanks for your continued support. I appreciate all my JoeDawgs. Alright guys, so the Fed plans to buy $80 billion in securities and $40 billion in mortgage securities until substantial further progress is made toward its goals of price stability and full employment. We got to keep these two goals in mind. So again, JoeDawgs, treasury bonds are essentially a loan to the government that is usually purchased by domestic consumers. They help the economy by providing extra spending money for the government. So when the Federal Reserve, also known as the Fed, buys bonds in the open market, it increases the money supply in the economy by swapping out bonds in exchange for cash to the general public. And if the Fed sells bonds, it decreases the money supply by removing cash from the economy in exchange for bonds. So in the most recent meeting, Chairman Powell said the Fed would continue to use a variety of monetary tools until officials are confident the U.S. economy is fully recovered. Powell stated that together, these measures will ensure that monetary policy will continue to deliver powerful support to the economy until the recovery is complete. If you ask me, JoeDawgs, this is really good news because it means that the Federal Reserve is committed to helping us, the American people, to helping small businesses stay afloat during this difficult time by keeping access to cash in the credit markets as liquid as possible. But again, it's important to remember that the Federal Reserve has influence over monetary policy. It does not have spending power. Any spending or stimulus needs to be approved by Congress. Now, when Powell was asked about concerns of inflation and the prices of goods and services spiraling out of control, he stated, and I quote, "It could be a while before we see higher inflation levels." He also said that empirical evidence shows there are disinflationary pressures across the globe that are keeping prices in check, even with our easy monetary policy. He stated, "I think you have to be honest with yourself about inflation these days. There are significant disinflationary pressures around the world, and there have been for a while. It's not going to be easy to have inflation move up. It's going to take some time. It took a long time to get inflation back to 2% in the last crisis." He also stated, "We're honest with ourselves and with you in the summary of economic projections, but even with the high level accommodations that we're providing, both through low rates and very high levels of asset purchases, it's going to take some time. So again, guys, with all the stimulus and the injection of cash into the economy, many people have been worried about inflation due to the excess spending, but from what he is saying, that is not a concern right now. Let me ask you guys a question. Have you ever been shopping and noticed that the price of things you typically buy have gone up? If the items you shopped for last year were $100 and now they cost $105, well, at the very basic level, that's inflation. So prices are changing all the time, but we don't say there's inflation every time we see a price increase. Instead, we say there is inflation when the prices of many of the things that we buy rise at the same time and then continue to rise. So, Joe, inflation is ongoing increases in the general price level for goods and services in an economy over time. Now, the Federal Reserve seeks to control inflation by influencing interest rates. So when inflation is too high, the Federal Reserve typically raises interest rates, slow the economy, and bring inflation down. On the other hand, when inflation is too low, the Federal Reserve typically lowers interest rates to stimulate the economy and move inflation higher. So the Fed cut interest rates to near zero in March and has been buying about $120 billion in government-backed debt each month to help soothe up the markets and shore up economic growth. Now, the central bank explicitly tied its bond buying program to its goals of full employment and stable inflation in its December policy statement. So this move by the Fed suggests they expect to continue its purchases for some time, given how far the economy is from meeting the goals it set out to meet. Now, Mr. Powell suggested that more help from Congress is needed. He stated, and I quote, "It's the 10 million people who lost their job. It's the people who may lose their homes. You see the many millions of Americans who are waiting in food lines in their cars these days." I mean, he hit the nail on the head, guys. He really gets it. In his press statement, he went on to say the economy would need the Fed's support for quite some time. While economists expect the economy to grow in the middle of next year, it's going to be a while before we really are back to the levels of labor market conditions that we had earlier this year. Now, as far as economic projections, Powell stated he sees unemployment declining to 5% in 2021 versus a previous prediction of 5.5%. He also states gross domestic product will come in at 4.2% versus 4%. But what's most interesting is that they are projecting interest rates near zero through the end of 2023. I mean, these low rates are good if you're looking to refinance a mortgage, a car loan, student loan, or any other debt. So essentially, borrowing money is cheap right now. On the other hand, it's bad for savers and regular savings accounts. So with these low interest rates, you should definitely consider putting money in a high yield savings account versus a regular savings account. And of course, you should always have your emergency fund and definitely be investing your money. So if you just have excessive money sitting in the bank, it's slowly losing value over time and it's not being put to its best use. Remember, the goal should be to have your money making money. So there you guys have it, an update on the economy and the latest from the most recent Federal Reserve meeting. If you found value in this video, please be sure to tap that like button and share it with others. It really helps to support and grow the channel. Don't forget to subscribe and turn on the notification bell as I'm posting valuable new content every week. Thanks again for watching, and until next time.